Hello and welcome to the channel. We're covering iFAST Corporation, IAFA, for their third quarter and 9-month 2025 financial results released on October 24, 2025. iFAST delivered a powerful quarter marked by surging profitability and a new record for assets under administration as the company's strategic bets in digital banking and pensions begin to pay off significantly. Disclaimer: this video is for informational and educational purposes only and does not constitute investment, financial, legal, or tax advice. No earnings or returns are guaranteed, and past performance does not indicate future results. Always conduct your own research and consider consulting a licensed financial advisor before making investment decisions. Let's start with a detailed look at the third quarter 2025 results compared to the same quarter last year. Total revenue grew by a strong 37%, reaching SGD 135.82 million. Total net revenue, a key measure of the company's core earnings, was up nearly 40% to SGD 89.53 million. Despite a 34.8% increase in operating expenses to manage this growth, the company's efficiency shone through. Profit before tax surged by 49.3% to SGD 31.49 million. This culminated in a net profit attributable to owners of SGD 26.01 million, a 54.7% jump year-over-year. Consequently, earnings per share for the quarter climbed 51.8% to 8.56 Singapore cents. Zooming out to the 9-month picture, the positive trend is just as clear. For the first 9 months of 2025, total revenue rose over 30% to SGD 362.98 million. Net profit for this period increased by 41.8% to SGD 67.15 million. The 9-month EPS stood at 22.25 cents, up nearly 40%. Now, let's unpack the key performance indicators driving this growth. The cornerstone metric, assets under administration, AUA, reached an all-time high of SGD 30.62 billion as of September 30, 2025. This represents a 29.6% year-over-year increase and a 12.6% increase from the previous quarter, showing strong sustained momentum. This growth isn't just from market appreciation. The company is attracting significant new money. Net inflows for the group hit a record SGD 1.49 billion in the third quarter alone. For the first 9 months, net inflows were a record SGD 3.72 billion, which is over 10% more than the entirety of fiscal year 2024. Breaking down the geographical performance for the first 9 months reveals a well-diversified engine. Hong Kong was the largest profit contributor, delivering SGD 47.44 million in profit before tax, a solid 19.1% increase, largely fueled by the ePension business. Singapore, the main AUA contributor, posted a 17.2% profit increase to SGD 30.50 million, with its AUA reaching an all-time high of SGD 21.62 billion. Malaysia demonstrated impressive growth, with profit increasing by 45.3% to SGD 4.77 million. And in a pivotal development, the UK banking operation, iFAST Global Bank, achieved a significant turnaround. It recorded a 9-month profit of SGD 2.01 million, a complete reversal from an SGD 4.66 million loss in the same period last year. This marks 4 consecutive quarters of profitability for the bank. Regarding strategy and management commentary, the company's report emphasizes 3 key drivers. They state, the increase in 3Q 2025 profitability was driven by growth in the Hong Kong ePension business, continuing growth in the group's core wealth management platform business, as well as the turnaround of iFAST Global Bank. Management reiterated its vision to build a seamlessly connected global digital banking and wealth management ecosystem. A key component of this is the iFAST Bridge, designed to enable customers to transfer money swiftly between its global banking and investment platforms at no cost. This vision underpins their 3-year plan for 2025 to 2027, which targets an ambitious AUA of SGD 100 billion by 2028 to 2030. let's briefly touch on the company's financial health. iFAST maintains a strong balance sheet, with cash and cash equivalents standing at SGD 772.43 million. The company highlights a conservative strategy for its UK bank, where the vast majority of client deposits are held as cash with the Bank of England or in short-duration sovereign and investment-grade bonds. This is reflected in its regulatory ratios, which are well above minimum requirements. For example, its liquidity coverage ratio is 617% against a requirement of 100%. Turning to the outlook and shareholder returns, iFAST is explicitly confident. The company states it expects 2025 as a whole to see robust growth rates in revenues and profitability compared to 2024. Specifically, iFAST Global Bank is on track to achieve its first full year of profitability. Reflecting this confidence, the directors proposed a third interim dividend of 2.30 cents per share, a 53.3% increase year-over-year. For the full fiscal year 2025, they expect to propose total dividends of 8.20 cents per share or higher, representing at least a 39% increase from 2024. For final context, the company's performance metrics are noteworthy. The group's annualized return on equity for the first 9 months hit a record 26.1% since its listing. Profitability is also strong, with the profit before tax margin based on total net revenue standing at an impressive 34.5% for the 9-month period. These figures showcase strong operational efficiency and a highly scalable business model. So to wrap up, iFAST Corporation's results for the first 9 months of 2025 demonstrate powerful and broad-based momentum. Key takeaways are the record-breaking AUA and net inflows, the successful turnaround of its UK bank into a profitable growth engine, and significant contributions from its Hong Kong ePension business. All of this points to a strong full-year outlook and confidence in its long-term strategic plan. That's the concise wrap on iFAST's latest results. Please like and subscribe our channel for more videos. Thanks for watching and see you in the next video.